Good morning, it's Jeffrey Christian. It's a little after 10 o'clock on Friday, the 23rd of September here in New York. The first day of autumn and the weather is up there. Gold and silver prices fell sharply today, and I want to talk about the things that matter to gold and silver. What we saw today was a broad-based sell-off across financial markets. Stocks have fallen sharply. Virtually all of the commodities have declined sharply. Corporate bonds and currencies other than the dollar have all dropped sharply. Gold dropped as low as 1648. We have been saying for months that we thought that there could be a drop down to 1650 in the June to September period. We were wrong. It went to 1648. And silver prices touched 1887, breaking below our $19 target on our sell sign, that signal that we issued on the 13th of September. The prices have come back up since that in trading later in this morning, but they remain vulnerable. And again, this was a very broad-based sell-off across financial assets. U.S. interest rates, bond rates are up and up significantly following the FOMC increase of 75 basis points on the Fed funds rate. And the U.S. dollar is up strongly, partly because of the interest rates, but for other reasons too, which we'll talk about. So I want to talk about what all of the factors are that have contributed to this. We had been thinking that we could see a bottoming in the price of gold and silver in that June to September period. On a seasonal basis, that makes sense. On a cyclical and a fundamental and a macroeconomic basis, there are factors that have emerged over the last few months and really the last week, in one instance, that suggests that the gold and silver prices have some further downside potential, at least in the short term. So we have issued trade recommendations, or we are issuing trade recommendations this morning for gold and silver for our short-term investor clients, basically saying stand aside here because while the prices have reached our downside objectives today, we see other factors that could change that. What's really going on? Well, first off, it's interest rates. Interest rates are rising in the United States. They're rising in other countries. The Bank of England increased its interest rates 50 basis points this morning. That's not as much as the U.S. Treasury raised. U.S. Fed raised its rates 75 basis points earlier in the week. But you're seeing rising interest rates, somewhat negative for financial assets. Inflation continues to be an issue, although there are signs of peaking inflation and some declines on some of the cyclical factors there. And overall economic conditions remain weak, but non-recessionary. So you see people moving away from some of the concerns that they've had. There still is a recession on the horizon in the United States. There are recessionary conditions present in Europe and in the United States and Japan and the UK now. We're seeing weaker economic conditions in China. We're seeing zero COVID policy lockdowns of major cities in China. And then there's the war in Russia's invasion of the Ukraine. Now, you would think that a war could be positive for gold, but insofar as the Ukraine government and military have made some major strides in their last couple weeks, and insofar as the Russian government is showing a tremendous amount of disorganization, disunity, disagreements within the highest levels of the government, you could see some relaxation of international tensions over the next few weeks vis-a-vis Russia's posture toward the world, Russia's posture toward the Ukraine. It's very dangerous at this point, but it's also very interesting. So you've got economic conditions, and then there's politics. You've got Putin and the future of Russia. You have the U.S. election coming up in about 5 or 6 weeks. and U.S. politics have been dysfunctional. They're becoming increasingly dysfunctional. They're also becoming more legal in that there are various criminal investigations of a number of candidates for Congress and the Senate and government, governorships, as well as the ongoing melodrama of the Trump family. And then you have the Chinese Communist Party Congress coming up in October 16th, and it's going to be interesting to see what happens there. We assume that Xi Jinping will be reappointed, but there'll be other issues that will be coming up at the Chinese Communist Party Congress, which will be very interesting. Europe continues to be somewhat in disarray. It's probably in much better shape for facing the winter than a lot of people think, but there are economic weaknesses that are there. And then the UK has post-Queen Elizabeth issues. Interest rates are rising. They still are very low by historic standards. The dollar is not collapsing. I want to talk about some housekeeping issues. We will not have a video next Tuesday, and we may skip a few others over the next few weeks. We probably will not have a video on Friday, October 7th either. I will talk in a minute about a gold-backed currency for us. We actually discussed this in our September 9th video, but several people have asked us to discuss it. So there's the link to the September 9th video. You can go back to it. Also, for those people who say, hey, CPM Group, buy a microphone, it's not the microphone. It's something in the system that we're using to record it. Our IT people are working on it. It's not the microphone. You can save your breath on that one. Now, let's talk about what we called on September 9th, the Sino-Russian alternative currency farce. And it is a farce. All that stuff that you hear about a gold-backed ruble or a brick replacement for the dollar, it's all nonsense. Again, go to our September 9th video. It's a waste of time. It's a distraction for investors from what is important. Why anyone would think it's real is really beyond my comprehension. We don't need to say much more about it. There is not a brick initiative to replace the dollar, the way some gold promoters are saying. Only Russia is discussing a rapid dollar movement away from the dollar. But Russia has been trying to diversify away from the dollar for more than a decade, close to 20 years, and it's made very little progress in that front. No government or central bank would make its currency convertible with gold. Because if it did, its gold would be drained immediately. The United States saw that in 1967 and the first quarter of 1968 and closed the gold window. The British saw it after World War I. It's not going to happen. And not even Putin is suggesting a gold backing for the ruble. He's been buying a lot of gold for his foreign exchange reserves because of the sanctions that he's been facing for a decade or longer, and the hostility he's been facing from the U.S. government and to a lesser extent from the U.S. allies since he took office in 2020, 2021. So he's buying gold for foreign exchange reserves, but he has absolutely no intention in backing the ruble for gold and making it convertible into gold, because as stupid as he may be in attacking Ukraine, he's not so stupid as to allow people to buy the government's gold at any cost. That's all I've got for now. I mean, this is a chart on foreign exchange reserves of central banks. The US dollar is about 59% of reserves. The euro is about 20%. The yen's 5.4. Pound sterling is 5. No one stores their foreign exchange reserves in rubles. And the Chinese yuan is now up to about 2.9% of foreign exchange reserves held by central banks. The reality is that you have so much liquidity in the dollar. Central banks have been talking about moving to a new international currency regime for more than 40 years. And they've said throughout those 40 years, this is something that's going to take decades to change because you need to have sufficient liquidity in other currencies to replace the US dollar as the de facto currency. And if it's 59% in the foreign exchange reserves of central banks, estimates are that it's about 75 to 80% of private sector financial wealth. So before you can move away from the dollar, you have to have liquidity in other currencies, alternative currencies. And to do that would have to be hyperinflationary in those governments. And, the wet dream for gold bugs is that you move to a dollar gold stand, you revise everybody moves to gold, and the price shoots to $10,000. But there are a number of reasons why that's just not going to happen. And investors really should get over that pipe dream and move into the real world and think about gold for all of those valuable reasons why you should own gold. That's all we have for this week. I'll miss you next Tuesday. Hope to catch you next Friday. In the meantime, you can go to our website and you get all kinds of free reads, and we continue to work on improving that.